Hello everyone. In March, all eyes were turned towards the global banking system that has been deeply shaken by the collapse of three US banks and Credit Suisse, while other segments from credit markets fostered more resilience. Let's start with banks. In the US, public authorities have confirmed that regional banks were not properly regulated, and they will take action in the coming weeks. We take reassurance from the fact that deposit outflows seem to have stabilized, and we expect strong action from regulators to properly deal with these smaller banks, which are significant for the US economy. In Europe, the collapse of Credit Suisse was a shock for AT1 cocoa bond holders, which got wiped out entirely. While it can be argued that creditor hierarchy was not entirely respected, we view this decision as the best one that was available to preserve financial stability. The woes of Credit Suisse were very specific to this bank only, and we do not see any other bank that could follow the same path. The fundamentals and the regulatory oversight of European banks are superior to those of American banks, which had deregulated part of the banking system these past years. We remain cautious on subordinated debt, not for fundamental reasons, but as the asset class may be dependent on flow metrics and bond liquidity for the coming weeks. On investment-grade credit segments, financials now trade with significant premia over non-financial corporate bonds. This premia will take some time to normalize, and we view current relative valuations as fair. Primary markets have been active, and several deals attracted strong demand. These new bond issues are a proof that credit segments continue to function normally, even when bank spreads are stressed. Inflows in the segment have been muted and should continue to be dependent on rate volatility, in our opinion. High-yield credit segments showed resilience amid the market stress, even though spreads widened overall. Fundamentals in Europe and in the US remain strong, but we remain wary of idiosyncratic stories, and we remain cautious on the subordinated layers of high-yield non-financial companies. Market technicals, such as flow dynamics and primary market activity, should continue to be quite balanced. As a conclusion, volatility on rates and credit spreads could remain elevated for the time being, with credit segments moving fast in one way or the other without any clear direction. Thank you for your attention.